Yeah, no, that's crazy. V bottomed hard. Yeah, that looks like the 2020 pandemic crash. The recovery from that one. Yeah, so that was earlier up here. So 946. That was around right here. I was getting short just about, and then when we started to sell off, we had sold off down here, and then I started to cover some of my positions. So that was pretty much the only trade that I had taken today over here. The exits could have been a little bit better, not gonna lie, but that was pretty much all on the day. Nothing really too crazy, but this position was QQQ. The short call spread that I had was doing a little bit better earlier today whenever we did have the sell off, and then we've rallied a lot since then. But that's 37 days till expiration. Tesla sold an out of money put spread. We're up like 37, almost $40 on the overall position. 37 days to expiration. Just got to wait on that one. IWM, this one's doing pretty well. The volatility is kind of coming in a little bit on that one. Up almost $40 on the overall position, and then we still have 37 days till expiration. So, yeah, honestly, today was it felt like a very lackluster day on my end, I guess you could say. Like, I think in the max I was up total on this position maybe like 130 $30, and I didn't scale out that well today. But just with the type of move that we had, it just did not execute as well as you sometimes could have. But and then we sold. I mean, we sold off a lot today. I mean, this rally is insane. Let me put that back up.
It switched along, won't stop.
Yeah, this thing is
won't stop, can't stop.
This is an insane squeeze. Actually, that is crazy.
You think it's potentially from the presidential debate shaking the markets?
And I guess it's as good as mine. One thing that helped me take the short today was so over here, this little highlighted area. I'm on the 5-minute time frame now. We started kind of trading through the volume that we had traded yesterday. So what do we have here now is like kind of like a smaller liquidity area, and all it was is taking into account yesterday's previous trading activity and how we would trade whenever we get to those areas. So you can see we had this marked out before the market opened, and whenever we did start trading in this area, which was again the previous day's average, where the average trading activity occurred, hence the volume profile right here. So I'm going to go ahead and remove that now. But whenever we started, trading in this area, let's say you were, short biased, like bigger picture, like looking at it at the bigger picture, let's say you were short biased, you would then use something like the previous day's trading activity to kind of help guide your judgments and to kind of just help guide your decision making and kind of just entry and exit process. So something like this can give you a little bit more confidence, which it gives me more confidence when knowing how to navigate the trade in terms of, again, entry. Is, if I were to go to this larger time frame, you can see a lot of trading activity occurring whenever we're hitting the larger time frame liquidity. So because of a couple different reasons, I'm short biased now. As market opens, I will use a smaller time frame to again find entries and exits. So whenever we started trading down through this previous day's liquidity area, which was where I'm going to sound like a broken record, but I'm just going to keep repeating it though. Again, this area was the average price traded on yesterday's trading activity. So whenever price traded in this area, you can see we get some type of response in the price action. We start to consolidate a little bit. We slow down a little bit with price. And then you can see once we started to trade through it to the downside, the selling, picked up, and we even got some stacked imbalances to the downside. So whenever I was looking at this today too, this gave me a little bit more confidence to, pull the trigger on a trade or, just gain the conviction and confidence and just learning how to navigate the trade, because with the larger time frame, it helps us get our bias. But then again, we need to know how to kind of navigate that. So then we'll use a smaller time frame to do that. But other than that, we'll see if we keep, like, as of right now, what would be cool to see is something like a failed auction or something like price trying to trade above this area and then failing and coming back down to the downside underneath this liquidity zone. I'd be very, very bearish if something like that happened.
I'll count on that.
Yeah. So if that scenario plays out, you will 100% hear from me taking a short trade. Whether or not I lost or made money, I will.
Hear something.
Yeah, there's gonna be something there. Even if I make or lose money, a scenario like that playing out, 100% take the trade. because that would be a failed auction. And one thing I've observed is whenever there's a failed auction is just, buyers failing to take the price higher. Like whenever because if we go back to the fundamentals, whenever buyers and sellers start to agree on price, that's where we start to see consolidation. That's where we start to see the market start to chop around a little bit. And we'll often start to see that in the liquidity areas. That's, again, why the market will stop moving. The reason why the market will move to one side or the other is because it is really just simple as supply and demand. It might sound dumb, but it's because buyers or sellers are being a little bit more aggressive than the other. And that's when we'll actually get a market move. And the market, which we call price discovery, when it starts trending, the market will start trending into price discovery until it can find buyers and sellers, an area where buyers and sellers will start agreeing upon price, and then it'll start the consolidation again. So like it might sound a little stupid, but it really is like the fundamentals sometimes. So that's where we now get to something called like an auction. And whenever the auction is finished, if buyers don't, finish taking the price higher, then that's what we'll call a failed auction. And failed auctions typically occur right outside liquidity areas. So we might see like a double top and it might sell off, and then that will like confirm our belief that double tops are real, technical analysis is real. But it's like, again, like what is the context of that? So it's like whenever we break it down to the fundamentals, and this might whenever we break it down to the fundamentals, it really does just come up down to supply and demand. And where the most of liquidity is sitting in the market, it makes sense if most of the liquidity is sitting in one area of the market, that there might be a bigger move away from that area because there's more orders to actually drive price. So if we understand, let's say we're coming up to like a really large liquidity area and we're starting to get a ton of passive sellers, like there's a lot of passive sellers, and let's say it's showing us there's a ton of aggressive buyers, and those aggressive sellers are just overwhelming the aggressive buyers. It lets us know, there's probably a lot of, selling, a lot of limit orders in that area. And then, we might see a double top form, but it's like, just because there's a double top doesn't really mean the market should sell off. It's like that usually comes from something happening, behind the scenes. But anyways, not a fan of technical analysis and shapes and all that, but reading the tape and volume and, reading the order flow, I believe is very, very helpful when it comes down to trading futures. But anyways, the market doesn't look like it's trying to slow down. Feeling how the micros move, I hear you. Yeah, the micros are a great tool to use, especially when it's so volatile lately. Like I was just taking maybe one micro position for me personally, just especially when the market is doing something crazy. And honestly, even using the micros, you can get some pretty solid gains just using, the smallest contracts that you can pretty much use to trade NASDAQ. Anyways, I'm probably going to look to put on more positions for today and see what Dr. Jim thinks about some of those. QQQ, kind of one of the main ones I'm really looking out for. It was doing better today, but now this rally is really catching this one off guard too. It's not in the money yet, so we have a little bit of breathing room at 470. Break even like 471.5 around there. Yeah, 471.5. So honestly, I'm pretty far away. 471.5. This is my break even on the call spread.
Okay.
That's what's so nice sometimes. Like you just have a kind of like a built-in cushion when you sell out of the money contracts. Because it's it's trading against me, it's bouncing against me. But if the contracts were to expire today, I would make 100% of the profit. So that cushion can be so helpful. Because like too, you don't have to really time those bigger moves. Necessarily. Like we might get the sell-off, right? Because I'm bearish on the position. We might get it, but I don't even have to really time the day the sell-off is going to happen. I just need it within a certain time frame, within a certain window. But anyways, that's QQQ. No, I'm looking at DJT from last night. I was wondering how it was doing, post debate.
And,
I noticed it was doing too hot.
A little spike and it went down. So take that with what you.
That's funny. But no, honestly, some of these contracts aren't too bad. Like if you were to sell some puts, you can get a little bit of juice out of them with a decent expected move. So I'm not going to be touching it. But anybody feeling?
No, that's pretty much it. As you guys know, we have streams right after this. Me and Errol will be back on Monday. If you guys want to watch previous streams, you could go to the app and watch them there as well. But that's pretty much it for me.
Cool. That's going to be it. Thanks for hanging out with us, and we'll catch you guys next time. Peace.
Peace.